The kind of trends that we're seeing with SaaS companies is what was really interesting last year, and we'll see how it plays out this year by the end of this year. A couple of trends that were interesting. What we saw is companies under $10 million spending huge amounts, SaaS companies, in order to spending on hosting, spending on product development, and particularly on sales and marketing, and establishing themselves. And then what we saw was some of the expense ratios coming down in the $10 to $20 million range. But then at the $18 to $20 million range, going back up. And what this was showing was that they were spending more heavily. And I think in that range between $10 to $20 million, companies were finding how to get to cash flow positive, learning what their sales strategies were, who the target customers were. And once they really had figured out their market, their target customer, then taking an additional or final big round of venture money and really blowing it out to try and get to that $50 or $100 million. And so the trend line isn't sort of a simple, highly spending huge amounts and being highly unprofitable in the beginning and then getting better and better and better. It's more like getting better. Better is a judgmental word, but then spending a lot more in the next sort of stage. And you even see companies like Salesforce.com. I mean, they're still spending 50% of their revenue, which is, $2+ billion on sales and marketing alone. So SaaS companies, I think, stand out hugely in terms of the kind of investments that they're making in sales and marketing.